after COVID. In fact, let me look. The national debt has been really starting to move. Let me look at the national debt clock. I just want to take a look at that and see how much higher it's gone. Hold on. National debt clock. You can see this clock on the internet. Nobody really pays much attention to it anymore. I forget when they first put it up there. Yeah, look at this. We're now almost at 32.5 trillion. We just passed 32 trillion like a month ago, because we're at 32 trillion 476,000. We're going to be at 33 trillion before the end of the summer. I mean, this could be the quickest trillion we've ever added to the national debt. It might only take like 3 months for the national debt to get up there. So it is just spiraling out of control. How is there any hope that you're going to get inflation under control? In fact, if you look at the historic relationships between the US dollar and the budget deficits, when the budget deficits are rising, the dollar is falling. And that's exactly what's happening now. Budget deficits are exploding. The only thing that's been keeping the dollar up has been the rate hikes, and the idea that the Fed is going to keep on fighting inflation and do whatever it takes, and it's going to keep on hiking rates. Well, it's not going to do that because it can't possibly hike rates enough to break the back of inflation. All it can do is break the economy, which in fact it's already done. It just hasn't shown up officially yet. They broke the financial market. That already happened with Silicon Valley Bank, Signature Bank, the other banks that blew up. The Fed broke them. I mean, of course, that was an accident waiting to happen. It wasn't the rate hikes that did it. It was the rate cuts. The rate hikes just exposed the problem that the Fed created with the rate cuts and keeping rates as low as they did for as long as they did. But imagine what's going to happen in the next leg. Because now that the bond market is breaking down and that yields are moving up, we're going to have a lot more pressure. We had this lull before the storm because the government rushed in with this rescue and bailed out these banks and bailed out the depositors and created this false sense of complacency that the worst was over and that, we didn't have anything to worry about because the politicians and the bankers solved the problem. They didn't solve the problem. They just papered it over as the problem got bigger. And so I think that what's going to be happening is that the dollar is going to break, right? And when it breaks, it's going to break hard. And that makes sense with these exploding budget deficits and trade deficits. And if we get a weak dollar, then again, that's going to put wind in the sail of a commodity bull market. We've already turned the corner on oil. If the dollar weakens, then that's going to further strengthen oil. That's going to put more downward pressure on bonds. And in fact, if we really get a run on the dollar, we're going to get a run on bonds. We're going to get a run on treasuries because a lot of international investors who want to get rid of the dollar, they got to get rid of treasuries because that's where their dollars are. They're invested in treasuries. They didn't stuff them under a mattress. They bought bonds. A lot of them bought treasuries. So all that's going to come under pressure. We'll see what happens next week. I mean, I'm very interested to see if we get some significant follow through on last week. I mean, nobody seems to be worried. I mean, I read, quite a few articles, over this weekend, and I didn't really notice any concern. Nobody is really pointing to what happened this week with any sense of concern that maybe this is the beginning of something or the end of something or both. And so I think it's going to be very significant to watch the markets to see if we get a further breakdown in bonds, if we get a big move up in gold, a big move down in the dollar, and the stock market goes down, that will be a good sign that what I just pointed out is accurate. That we've reached a critical inflection point in the markets, and things are about to change. And again, that means that people have to get better prepared. That time is running out to get your portfolio to reflect this. I already mentioned, Schiff Gold and getting your gold. If you want to be more aggressive, look at the mining stocks. Again, I've been buying more of these stocks myself. I put more of my own money into gold mining stocks again last week on that sell-off. I mean, every time these stocks are selling off, I'm buying. I mean, I think I'm being given gifts by the market to increase my position, and that's what I'm doing. And that's what I encourage anybody who is willing to accept the risk. Because again, gold stocks, these aren't widow and orphan type investments. I mean, there's a lot of risk in mining anyway. I mean, all mining operations carry a tremendous risk. I mean, if you're looking for a business that doesn't have a lot of risks, then don't get into mining. But I'm looking for speculations where the upside potential is way out of proportion to the downside risk. And that's what I think I've got. In fact, I think from a perspective of my entire investing lifetime, I don't think I've ever seen a better risk reward in the mining stocks than what I see right now. Sure, you could lose a lot. I mean, hell, some stocks could go bankrupt, right? You could lose everything. But even if you lose everything, right? But if I think that you can make 10x, 20x, 50x, I mean, that is way out of proportion. The amount that you could make, I think, in the mining sector, if I'm right, is so out of proportion to the money you can lose. So as long as you can afford to lose some amount of money, then put that money into the sector. Because what you can make, if I'm right, is so out of proportion to what you can lose. Now, don't invest if you can't afford to lose, because there's that risk. But it's the risk reward. That's what makes it such a good speculation. There's so much more to make, if I'm right, money-wise, than you could lose if I'm wrong. You just have to be prepared to lose and not invest more than you can afford to lose in search of those gains. So if you're looking for that kind of skewed return, that way out of proportion upside, then look at these mining stocks. And again, you can do it yourself, or you can have my team manage it. Adrian Day manages the gold portfolios for Euro Pacific Asset Management. So you can have a custom account managed by Adrian Day. It's your own individual account. If you don't have enough for a custom account, if you can't meet the minimums, then you can talk to the reps at Euro Pacific Asset Management. You can buy our gold fund, the Euro Pacific Gold Fund. You can buy it directly on my website at europac.com, or you can buy it at any discount broker. You got an account at Schwab, Fidelity, Ameritrade, all Interactive Brokers, all these brokerage firms. You can buy all my funds. They're there. Buy them no load. You make sure you get the right symbol. Also, we have wrap programs where we waive the loads. If you want to get into a portfolio where I manage your account within my funds, where we kind of tweak the allocation and time the market for you, we do that at Euro Pacific Asset Management and at the Alliance Global Partners. So you got to talk to one of my brokers about the wrap accounts. But I'm talking specifically about the gold accounts and the gold fund. And that's where I think people should be focusing. I mean, I like all my other funds. There's a lot of upside potential in those funds. But the gold stocks just remain, I think, they're giving these stocks away. I don't know how much longer we're going to have this opportunity. That's why I like to, focus on it, because, I think we're going to be able to buy these stocks for years and years and years. They're just not going to be this cheap. And so as long as they are, I'm trying to encourage anybody who is a speculator, you're willing to take the risk to take your positions. And again, I'm adding to my own positions in this sector because I'm just surprised even that at this late stage that I can still do this. I would have thought that I was done buying gold stocks. I had so many, I was just going to kind of rest on my position and invest new funds in other sectors, but I keep having to buy more gold stocks. It's not like I'm not buying non-gold stocks. I'm buying those too. I just thought I was done because I have so much money already in the sector. But I can't ignore the opportunity that the market is giving me. And so I would encourage my clients to do the same thing. Again, remember, before you buy the gold fund, read the prospectus, make sure you understand the risks. The same goes with any of my funds. Got an emerging market fund.